Two big stories leaving investors with a great deal to ponder this weekend. 244,000 new jobs were added last month. That is the biggest monthly gain since last May. Now, the numbers were far above the forecast of just 185,000 jobs. The unemployment rate, that inched up from 8.8% to 9% because of the household survey. Meanwhile, you've got European leaders reportedly holding an unexpected meeting in Luxembourg that may be focused on figuring out a way to restructure Greece's debt. Now, the euro has weakened significantly this week and today after those reports from the German magazine Der Spiegel that Greece may dump the euro. Now, European and Greek officials have denied the report. And here to help us sort all this out is our Taking Stock think tank. With us, we have Christian Thwaites. He is the president and chief executive of Sentinel Investments with about $23 billion under management. We have David Semmens. He is the U.S. economist at Standard Chartered Bank and is a rated Bloomberg Best for his forecast. And Jeanne Branthover, managing director of Boyden Global Executive Search. Bloomberg Business Week has named Jeanne Branthover one of the world's most influential headhunters. Thank you all for joining us. Christian Thwaites, you first. The reports out of Europe, the denial that Greece would leave the euro, is this just posturing on the part of unnamed Greek officials to try to get a better deal from the European Union?
No, I think it's not posturing, but I think it's a real struggle to arrive at a solution which, as you know, has been going on for well over a year now. So we've seen the spreads of Greek debt over German bonds go up to about 1,300 points. Last year, at the top of the crisis, it was 900. It got
the Greek government has to pay more in interest than any other government for people to lend their money.
They pay 24% for two-year money.
24% for two-year money. Would you take that bet?
No, I wouldn't.
You wouldn't?
No, I wouldn't, because I think there's a lot of still underlying Greek inflation, and I still think they have the underlying solvency and fiscal problems and crisis to attend to. The liquidity problem can always be sort of postponed for another week or another month at a time. But certainly the markets are very skittish that something might happen. I don't think that we're going to see an announcement of Greece coming out of the euro. That would be extraordinarily expensive and very difficult to stomach for the EU officials. But we'll probably see some sort of restructuring coming up in the Greek debt over the next couple of months.
Why is that? Because you think that the Greek government wants just as good a deal as the Portuguese government received earlier in the week?
Well, I think that they see that and also Ireland from a few months ago, and they're in an intolerable situation. GNP has declined by 6%. The estimate was going to decline by 3%. Unemployment's at 15%. Manufacturing and retail sales are all down in very significantly. So they really have to try and get from under this, crushing debt load, and the extend option is probably the best of the lot.
Jeanne Branthover, start us off about U.S. jobs. The report today surprising a lot of people. Were you surprised by the positive? No. You.
I've been on telling you things have been good for a while, at least in the financial services sector. But now it's going way beyond that sector.
All right. Jeanne Branthover, you were saying that you were not surprised by today's jobs report because business, at least in the areas that you focus, the finance industry, have been booming. Booming.
Started at the end of last year and continued, surprisingly, through this year. And now it's even bigger than ever. They all set their strategy of what they were going to do, waited a little while to put it into effect as far as hiring. And now it's really the floodgates are out. And so in the search business, we are extremely busy as we were in 2007. And it's at the very senior levels. But then it's also trickling into middle management as well. The other thing we're seeing is people that would call us that they're unemployed, that they were really sure they would never find a job and stepped out of the market, are coming back in because they really believe that the market is back and they're employable and they should get back into the interviewing, process. So you're seeing a lot of changes, you're seeing a lot of activity, and it's all real. Offers are being given, candidates are saying yes, they're moving, bonuses, the whole compensation structure is alive again, and people are really excited about working.
David Semmens, come in on this topic because while Jeanne Branthover sees optimism and very good things in the financial services industry, the jobs report today, if you peel back the headlines, Are people still looking for work? What about underemployed Americans?
Right, well, when you look at underemployment actually ticked up slightly to 15.9 from 15.7. But when you look at the participation rate has basically stayed flat for the last 3 months. And when you have been seeing the last 3 months have seen pretty encouraging numbers. And so you would have thought people would be coming back in and the labour force would be increasing. And you're not seeing that. So we're not seeing people being encouraged. It's the people who have lost their jobs recently and then get a job again quickly. The long-term unemployed are staying long-term unemployed. And that's really the key problem that needs to be fixed before we're going to see a real turnaround in this economy.
David, what about wages, though? People that have jobs, have they seen their wages increase, or have they flatlined as well?
Well, the last couple of months have actually been pretty encouraging, and they've risen by 0.9 and 0.2, and the estimation for last month was revised up. So these are going well, but the problem is these are the people who are working, and it's the people who aren't working who are receiving the benefits which are going to be expiring over the course of this year, and that's going to be a marginal squeeze on consumption, but it's still going to be a squeeze there. But at the higher end, you are still seeing wages picking up well and above inflation, which is important, of course.
Christian Thwaites, pick up on this theme. Do we still have an economy that is healthy, that is robust, and that means people that have work, and then there's everybody else?
I think it is healthy and robust, and I think these employment numbers are very encouraging. We add in the latest revisions. We've added 1.1 million new jobs in 6 months to the private sector. The public sector, we know, is shedding jobs, and that's probably going to deteriorate. And the participation rate in the labour force is going to throw the unemployment numbers off a little bit. But the indications are that the private manufacturers and service companies, and we saw that in the ISM manufacturing and non-ISM manufacturing surveys earlier this week, are relatively bullish about employment. This recovery isn't like the last ones. It's not V. It's a kind of a long-shaped recovery because of where we came from. But the jobs are being created, and I think the employment outlook is going to improve throughout the year.
Two areas where jobs are being created that were highlighted in the report today: the healthcare industry and the food service business, the restaurant industry. Does this mean that for an investor, you ought to be looking to consumer discretionary items, medical devices, pharmaceuticals, as well as what would be, I guess, characterized as the kinds of companies that would respond to people in the service sector?
Well, I think those are two sectors which can pick up people at relatively low entry and wage levels. I mean, obviously, the food industry and the fast food industry, McDonald's announced a lot of jobs a few weeks ago. Healthcare can do the same. It can take everyone from sort of the lowest level in hospitals and nurses all the way up. But the really interesting one is the manufacturing employment, which continues to be quite good. Export orders, again, looking through. And those are much higher paid jobs with much more trickle down and leverage for other jobs around them. And
well, it's interesting when you mention exports. There was a report today. It's not manufacturing, but it has to do with ethanol exports to Brazil. They're soaring because of the value of the U.S. dollar. Makes it very competitive to ship ethanol from the U.S. down to Brazil.
All the way from Middle America.
From the Midwest. Jeanne Branthover, and we were talking about Brazil during the break. Those are the kinds of people that are in demand, people that have expertise in emerging markets. Tell us about that.
Correct. Emerging markets are booming, and particularly Brazil. And we're seeing it in our company. It is amazing how many companies want to get into Brazil, and those that are in Brazil want to keep having market share in Brazil. So there is huge hiring. And one of the issues is there's not enough people in Brazil that have certain specialties. So we're moving people from, different parts of the world to Brazil. And then also many of the financial services firms will have people located in New York City, but focused on Brazil and the emerging markets. So there is a lot of hiring in those countries, but also a lot of hiring here in the United States geared towards those countries. So it's been a very big boom towards the BRIC countries and emerging markets.
David Semmens, a boom in the BRIC countries notwithstanding, how do you reconcile yesterday's jobless claims numbers with today's employment report?
Well, I mean, there are a lot of factors cited with regards to seasonality for the initial jobless claims. And also, it's important to look at the 4-week moving average, which has ticked up slightly, but it's not enough to concern us. And I think, really, when you look at the jobs report, you have to take also a lot of encouragement from manufacturing, because it was risen for 6 months straight for the first time since 98. And then you've also got retail sector, which had 57,000 jobs added, and that's also very strong and encouraging, especially as the consumer is supposedly being come under pressure this quarter.
We've got to leave it there. David Semmens, thank you very much. Jeanne Branthover, appreciate it. And Christian Thwaites, always appreciate your insights. Coming up,